the first and only podcast dealing with cost segregation, depreciation, and taxation. And now, your host, Alan Goldstein.
Hello, everyone, and welcome. Welcome to another podcast by Alan Goldstein from Emunah Cost Segregation. I'm very excited to be here speaking with you today because one of the biggest problems that we have when we analyze any report for cost segregation done by an accountant, usually we have a very hard time figuring out the basis because people cannot supply their documentation or their rationale behind the basis. Now, basis is everything because we work off of your basis, right? When anyone does a cost segregation report, we go ahead and we use the basis. Now, the easy step is to believe everything and then just use the numbers that are there. But what about if the numbers are not in advantage of the taxpayer? What then? Well, for that reason, we like to calculate the basis before we start doing any numbers with the accountant, the professional, the CPA, the enrolled agent, the tax attorney, whomever is calculating the basis, we would like to go over it. Why? Because part of the basis is the land component. Now, land, as you know, does not depreciate, so that is a fixed amount that stays there on your depreciation calculation. And sometimes that amount can be humongous, right? Compared to the actual building structure that you can depreciate. Do not use rule of thumb. Do not say, well, it's 10% in my area. Well, it's 20% in my area. Always make sure that you have the documentation backing up your calculation with your return. The reason I say that is because the IRS, they like to crack down on when they audit a return. If they see too much depreciation, the first thing they're going to ask for is your land calculation. And how do you calculate your land value? Well, there's several methods, but the easiest one is what the tax assessor's office states it is. Now, why? Because hopefully they know what they're doing, right? And it's a legitimate source, and the IRS accepts it as legitimate. There's other ways to calculate land value, right? Comparative sales, official appraisals, etc. So it depends, right? You have to see if it's worth it. I'll give you an example. There are some clients that end up filing lawsuits for their land calculation on their property because taxation is affected by all of that, right? So if the assessor's office says this property is worth, $100 million. Well, that's a problem because you have to pay taxes on $100 million. So a lot of people, not a lot of people, usually people that have a lot of property, they go ahead and they file lawsuits against the boards of taxation so that the tax could be accurately represented. Most investors do not. So my advice is use the tax assessor's office land amount unless you have a compelling reason to use an alternative method. And then you go ahead and you use that, but it has to be worth it, and you have to be very well documented. So, how do we calculate basis for a cost segregation study? It's really not complicated. The first thing we do is we determine the land value, get that number, and deduct it from the cost of acquiring or building the property. Now, what cost can we use? We cannot use demolition, right? If you buy a property, you tear it down, and all of that, that number is attributed to land. It's not attributed to the structure, so we cannot depreciate demolition cost and all that. That goes to the land component. So then once we have a number, you put in there the cost of the property, you put in there your closing fees, you put in there land improvements, you put in there whatever you put in there that they charged you. That's the amount that we go ahead and we use. How do we know that? Usually your closing statement has that outline for you, and then it'll list, the amount you paid and then the amounts to close on the property, etc. And those are the amounts that we use for your basis. Now, we have your basis, right? Or your cost to build, your cost to acquire, or whatever the case may be. Now you're entitled to a cost segregation report. So what is it that we do when you're entitled to a cost segregation report? Well, we use internal worksheets, but really, the IRS has a lot of worksheets and a lot of software programs that do almost the same thing. This is separate from a cost segregation report. Remember, this is only for the purpose of calculating basis, right? And how much amount you're going to depreciate based on basis before we even get involved in a cost segregation report, because we want to have an accurate number that we're going to work with, right? So we have the land, we have the closing costs. Now you have to select which method of depreciation are you going to use. Is it the GDS, the General Depreciation System? Is it the ADS, Alternative Depreciation System? We focus on GDS, right, for the work that we do. Then you go ahead and you use a maker's worksheet from the IRS. So the first thing you got to do is determine what type of system is it, right? In our case, we use GDS. Usually, your accountant handles all of this, but it's important for you to know what goes on in this so you can question what you have instead of just accepting it, right? Then we have the property class. How many years does it last? What does it fall under? Is it a 5-year component? Is it a 7-year? Is it office furniture? Is it carpeting? What is it, right? So it goes there. Then the date placed in service. That's the purchase date, right? Or the date of certificate of occupancy, which you can legally occupy, operate, or whatever the case might be. That's the date that we use. The recovery period, how many years in question are we talking about? Is it 15-year property, 27.5-year property for residential rental, 39-year, right, for commercial? What are we talking about here? What time period? Then we have the method and convention. And the method and convention, in essence, is which method are we using? Is it the 150% double declining method, 200% double declining method? And here it gets a little very detailed and bogged down. But just be aware. Is it the half-year convention? Is it, the beginning of the year? I mean, what are you using here? Then how much can you depreciate? Again, this is not for the cost segregation report. This is first to establish your basis and depreciation before the cost segregation report is done. So the rate for your depreciation depends on the property, and it's found in the IRS publications and more. Almost every single accounting software has them built in. And in essence, that gives you the amount, the percentage amount that you can deduct in the first year. And we know that as the straight line method, right? Which has no cost segregation benefit. You take X amount for your basis, divide it by 27.5, and that's the amount that you deduct every year. And then you go down the line, and then you say, for instance, were there any adjustments? Is it 100% business use, 50%, 75%, right? Did you claim any other deduction like Section 179, bonus depreciation, etc.? And then it goes down the list all the way to the actual amount of your basis. You do this for each component that you have. Generally, for a property, it's really easy, right? You just have an X amount for a building, for land, and that's it. But you can use this for any type of property that you have, meaning like if you have desks, if you have appliances, or you have anything else. And once you're done with that, all of that is incorporated by your accountant or your software into Form 4562 that is used for your return. Now, once you have that number, then you contact the cost segregation company, and then that cost segregation company will divide all the different components, right? Separate them from the actual physical structure Remember, land is never depreciated. So from the actual physical structure, we separate all the components, and then we come up with a number. You may qualify for bonus depreciation. And then once we have that number, we go ahead and either your returns are amended or you use the number this year to carry over. And it all depends on your strategy. Now, this material can put you to sleep. Absolutely. Most people do not want to hear about it. They just want a brief explanation and just do what you do and give me the numbers. And I understand. But what I want you to take away from this is that make sure that anything that is done, you have documentation to prove your conclusion. Not only for the purpose of income tax, but also for the purpose of your partners, for the purpose of any sale, for the purpose if you change an accountant, they don't have to make up a basis. I see it all the time. Well, I just got this account and that's what they had there. Well, yeah, you're allowed to do that and use that, but is it right? See, it all depends. It all depends. So I really hope that you enjoyed this podcast regarding the calculation of basis, because this is a question that we get all the time, and it can be extremely, extremely boring unless you're into numbers and that's what you enjoy. I'm Alan Goldstein from Emunah Cost Segregation, and I hope that you enjoy. Take care.